Let's get more on China's housing market with Jinsong, head of Asia Property Research at Credit Suisse. Thanks for joining us.
Thank you, Michelle.
All right, Jinsong, there is more evidence of a revival in China's property sector. New home prices in March climbing in 62 of the 70 cities tracked. That's up from 47 in February. What is behind this?
Well, I think one of the reasons was that the base last year was lower for March, but I think an important driver is what your colleague said just now. There's a significant increase in the amount of capital, meaning the government is loosening the money supply. So that has been the main driver for the housing price increase, especially in the major cities, because everybody feel that the safest investment is the housing in the major cities.
Right, and you mentioned the major cities. There's been a tremendous price increase in the top tier ones like Beijing, Shanghai, Shenzhen. We've got stagnation in the third or fourth tier cities, however. Now in Shenzhen, new home prices up more than 62% from a year earlier. Is there now a risk of overheating the housing market in these top tier cities?
Well, I think that given the recent cooling measures in Shenzhen and Shanghai, I think particularly in Shenzhen, because they rose, housing prices there rose so much last year. I think that in the near term, there is a risk that it may come down a bit. But since the supply-demand dynamics for the housing market in Shenzhen is still very tight, I don't expect a significant fall for housing prices in Shenzhen. I think they will probably be stable or move up at a slower pace than last year for the full year in 2016.
Jinsong, let's focus on some of the very bright spots. And the March report showed price gains spreading from the Tier 1 cities. For example, the Tier 2 city of Xiamen saw home prices up 5.4% from a year ago. So what measures have been effective in now building and shifting that demand to the lower tier cities like the Tier 2?
Right. If you look at the cities, the Tier 2 cities that actually experienced housing price increase recently, all of them are cities with significant population inflow. So those are the cities where there are more jobs created and the economy in general are much better. Some of the remaining Tier 2 cities, they are big cities, but they are in a region with a relatively weaker economic outlook, as well as some of them experiencing actually a net outflow of population. So those Tier 2 cities, housing prices actually did not rise as much. So I think that we will start to see more divergence between different cities, especially in the Tier 2, because I think the consensus now is that Tier 3, Tier 4, the even smaller cities are still in a severe oversupply situation. It will take time for them to recover. But in the Tier 2, there's definitely a divergence depending on the situation of each city.
Jinsong, according to a UBS survey of Chinese consumers, the #1 driver that's been prompting the Chinese consumers to buy is lower down payments. Is this dangerous? Are lower standards perhaps setting the groundwork for a potential bubble in the future?
Well, I think, obviously I didn't read the survey, but I guess, given the result, it's probably a survey mainly on the, people in the major cities, which I think is understandable because in major cities where the housing prices, if you look at the affordability levels, they're obviously very high. So down payment has always been the biggest hurdle for home buyers. So the government's policy last year to reduce the percentage of down payment definitely helped those people to, to be able to buy, to, overcome this hurdle. So I would say that, in the near term, I wouldn't worry too much about it. But obviously, if the housing prices continue to climb, and at the same time, if the leverage of the home buyers continue to be, climbing as well, then obviously, in the medium term, that could be an issue. In the near term, I think the amount of people who are using extremely high leverage, meaning that, looking for down payment financing, for example, those people are still the minority.
Well, how much of the interest in the top tier cities is linked to the reluctance to invest in the stock market following that big August correction? And what could make that dynamic shift if the market picked up again?
Well, I think there are some, effect of that, right? So I think if you look at, it's actually more like a near-term versus medium-term thing, because in the medium to long term, if you look at the data, the movement of the stock market is actually have a positive correlation with the housing market, meaning that over the medium to long term, if the stock markets continue to do badly, it's actually not good for the housing market. But in the near term, as you said, there's obviously an asset allocation going on here. If people in the near term feel the stock market is less attractive and they do have the money to invest, they will try to choose to invest more in the housing market. In the near term, I think that impact exists. But in the medium to long term, it is still up to basically the drivers for both stock markets and housing market. Underlying drivers are the same, which is the overall economy's condition in China.